I mean, look, it's ingrained in the fabric of Americans here. On average, I think the average U.S. citizen gets on a plane, let's call it 2.5 times a year. So we would really have to fundamentally rethink whether or not travel is going to be long-term impacted by, what ultimately could be a very seasonal impact of a virus that could die out during the summer, which historically has been the case for a lot of these, historical precedents.
So you'd kind of say to people, look at Warren Buffett, if you have a very long time horizon, he bought shares of Delta, or Berkshire did, again this week. But then people should keep in mind that case could take a while still to normalize. I mean, this is going to be a rough ride until we've totally got our arms around this thing.
Well, that's right. I mean, look, there is long-term value here. Again, this is a consolidated industry. The cost structures are equal. We do think there's an ability for these companies to generate profitability even in a recession scenario, and I think you'll hear most management teams echo that. But the fear, like Phil said, a lot of investors right now are calling us saying, well, hey, what if travel goes to zero? How much cash burn do these companies have?
Exactly.
How much balance sheet do they have remaining? And if you look at like an American, anywhere from $30 to $40 billion of obligations on the balance sheet, that's obviously a concern for folks that think that this could be an extended circumstance of demand destruction.
Right. So you've got American with a 4 times debt to EBITDA ratio, roughly kind of debt to income. That's twice the industry average. Southwest is at, 0.6. So would you recommend American here, or would you only recommend those with a stronger balance sheet?
Well, look, American has, roughly half the profitability as Southwest, too. So that's a big indicator of relative leverage. And I think if, American's management team was on here, obviously they'd say we're seeing impacts in the near term, but long term, we see no reason why we can't actually improve the profitability of the business from here. So therefore, if you want to swing for the fences, there's a lot of equity upside potential at American. We just need to get past this 24/7 news cycle that is really, sparking a lot of fear, but maybe irrational fear at that.
I mean, maybe, but I hear more fear from, people in my neighborhood than I do from my colleagues in the media. Final thing here on, the timing of this move and the strength of these balance sheets. You see that jet fuel, you think, could potentially cushion the blow because at least the drop in oil means there's some relief on that front, right?
Well, that's right. If you look at fuel prices, they're down about 20%. We don't know how much demand is down right now, and I think most of the carriers would even tell you it was a very fluid situation. We don't know how bad bookings will actually get from here. The indication so far, though, is that it's not nearly as bad as the stocks would predict. But you're absolutely right. With the decline in fuel prices, that's going to offset, a good 20 to 30% earnings cushion of whatever could come from negative bookings related to this.
Brandon, we appreciate it. Different point of view here on the Airlines.
Thank you.
Brandon Oglenski is the Airlines analyst over at Barclays.